Our world is rapidly changing. The concept of being a cashless society is looking more plausible every day. So, as a young adult learning how to manage your money, get your first credit card, and start applying for your first loan, what are the basics you need to know? Whether you plan to attend a university, a college, a community college, or a trade school, a post-secondary loan might be an option for you if you don't have the cash to pay for your education at the time. Students can receive post-secondary loans from the federal government, private sources such as banks and financial institutions, or from other organizations. So, what's your best option? Loans that are offered by the federal government usually have benefits such as fixed interest rates, payments that are postponed until after graduation, and they can even qualify for loan forgiveness. The types of direct federal loans that are available are subsidized, unsubsidized, plus, and consolidation. First, let's compare the difference between a federal direct subsidized loan and a federal direct unsubsidized loan. Looking at interest, which is how much money you will pay back in addition to the amount you borrowed, a subsidized loan will not accrue interest while you are still in school. However, an unsubsidized loan will begin accruing interest from the date your loan first pays out. For example, if you take out both a subsidized and unsubsidized loan for $5,000 each with a 5% yearly interest rate, after 1 year, you will end up owing $5,250 for your unsubsidized loan and $5,000 for your subsidized loan. The difference being that the government is subsidizing your interest on a subsidized loan, which basically means that they're paying your interest for you while you're in school, and depending on your repayment options, they might continue to pay the interest on your loan after school as well. With either loan, you will have a 6-month grace period after you graduate before you go into full repayment. So is there a choice on which type of loan you choose or how much money can be borrowed? While the preferred loan is the federal direct subsidized loan, it is based on need and only available to students pursuing their undergraduate degrees. The U.S. Department of Education does require all qualified applicants to receive this loan prior to the unsubsidized loan if they're going to borrow any direct loans. The amounts will vary based on the student's need and grade levels. If students don't qualify for the subsidized loan, or only a portion of it, they can always borrow an unsubsidized loan. That is one of the benefits of the direct unsubsidized loan. No matter how much money your parents make, students can always receive this loan up to their grade level maximums. While both subsidized and unsubsidized loans have different benefits, the reality is you might end up needing to take out a combination of the two to pay for your education. The last two types of direct federal loans are direct federal plus loans and direct federal consolidation loans. A brief overview is that plus loans are given to both students and their parents to help pay for their education and typically require a parent's credit score. The last federal loan is consolidation loan. This loan allows you to combine all of your federal student loans into one loan with a single loan servicer. The reason you want to know all of your options when it comes to federal loans is because they will directly affect your financial health once you graduate. That's the thing about loans. They're not free money and they should not be taken without consideration of your future and the fact that you will have to repay them. Here are a few things to know about taking out federal post-secondary loans. Know what a FAFSA is. It stands for Free Application for Federal Student Aid and is used to determine what kind of loans you qualify for. The form is available on October 1st for the following school year, and it's encouraged that you fill it out as soon as possible. Know if you're a dependent or independent student. A dependent student is one who must file their FAFSA with their parents' information, regardless of how the parents filed their taxes or whether or not the parents are willing to help pay for college. You can find the dependency criteria on the studentaid.gov website. Know what kind of grants you qualify for and accept all of them. Unlike student loans, which need to be repaid, grants are a form of financial aid that does not require repayment. To be eligible for most grants, you must submit a FAFSA and demonstrate need. Lastly, if you have any questions about the financial aid process or awards you may or may not qualify for, contact the financial aid office at the school you are attending. They can look at your unique financial situation and give you the best options. When it comes to post-secondary loan options, thinking ahead, knowing your options, and planning will help you choose the most affordable financial package to pay for your education, which in turn will make you more financially prepared for your bright future. So what are you waiting for?
This financial literacy video was brought to you by a grant from the Ohio Broadcast Educational Media Commission and WBGU-PBS in consultation with the Ohio Department of Education. For more videos in our financial literacy series, please go to WBGU.org.